Hello, folks. Brandon Chapman here today. It's another edition of the Theo Night video for Monday, September 13th, 2021. So, interesting day today. So, we did finish off the lows of the session. If we look from the cash here, we finished slightly higher from the session from Friday's close. After really kind of wilting, breaking the intraday low from last Friday, we did see some buyers come in late in the session and kind of bring things back up again. Not overwhelmingly so, but if you look at the sectors, today it was energy really topping the list, financials right in there. And of course, when you look down at the bottom, healthcare, utilities, and materials, technology really bringing up the rear, with healthcare being the most weak sector, unsurprisingly, after kind of how things trended last week for the healthcare sector. So as we circle around energy, of course, that's our topic today. Energy leads as the retail herd finds uranium in the forecast look cold. So we'll look at some unusual option activity among other things. As we look at the VIX, I mean, the VIX obviously was higher on Friday, reaching levels we hadn't seen for a little while. But it's been customary. You get a couple percent decline. We're met with buying activity, although today it wasn't necessarily as aggressive as in the past. So we'll look forward into tomorrow and the next day to see, do buyers come back, or do we see a continuation of the downside? You'll notice intraday, the VIX did reach a slightly higher level before peeling back and closing around 1937. So for those premium sellers out there, obviously 19 VIX is not a bad opportunity to explore some selling, but obviously Friday towards the close was better. And of course, those that are members of TheoTrade got the heads up and alerts to sell some premium on Friday that you're probably largely able to close out of today. Anyway, so look at the skew index. One of the biggest things that happened on Friday was that the skew index actually ticked higher to 151. It's rather unusual to see the market sell off and the VIX rise and the skew actually increase from one session to the next. We don't have today's price for the skew today, but again, it just shows that we're just not out of the woods yet. So while the market is in kind of a little bit of a pullback phase right now, the market's not necessarily saying, hey, we're all clear for a nice move higher. Similar to what we saw on the 19th, it was a much better signal that we could get an aggressive move higher. The last couple have been met with very oversold conditions really quickly off of the rally. And if we rally from here, that's probably the case. So maybe you get a few days out of this thing and then you sputter into the next high and then we see where we go. Or is this the one that finally kind of starts to gather some interest as we start to reach a September expiration where a lot of delta is going to be expiring? Does that start to open up the downside potential here for the S&P? Of course, we don't know. We don't have answers to those questions. But as you look at interest rates, look at the 10-year yield, basically down slightly. We're continuing to just consolidate right now. Bonds have gone nowhere as we're basically awaiting what's going to happen with the debt ceiling. If you notice, if you remember what happened in 2011, that was not a happy time for the market as we raised the debt ceiling, and inevitably what happened? We had a debt downgrade. So we'll see what happens. Watch IRX. Of course, if there was any risk of default, you're going to see 3-month T-bills really start to spike here. But again, I'm sure a deal will be done. Whether or not it's the full deal and maybe expanding it by several trillion in order to accommodate any aggressive spending that's expected here, like an infrastructure bill, et cetera. So right now that's tabled until there's a debt ceiling expansion of some order of magnitude. As we look at energy, /CL, for example, oil today starting to take out the prior high from September 2nd. Of course, Hurricane Ida took down a lot of oil production or supply, and yet oil prices really have not done a lot. But we did see finally get a little bit of a breakout today. And of course, there's that all-important 75 level. We might have a chance of testing that here in the near term. And as you look at /NG, this is natural gas prices. Natural gas prices have been on a tear. And for the first time in a really long time, we're back above $5 again. And this is something that was not unexpected based upon the cut in oil production we saw last year as a result of COVID policies. And we've not really restored that. Of course, energy companies are just kind of in a state of disarray or disrepair. They're not willing to ramp up supply, which has generally led to an oversupply of nat gas. And as a function, we're taking out a multi-year high at $5. And man, I can't think of the last time we've been here. It's probably been a really long time. And you'd probably have to go back to 2014 at $6. 2009 was around $6. But really, for a long time, $5 was the floor for nat gas until the great financial crisis. But what does that mean in terms of for the market, and specifically, what does that mean for energy stocks? And there have been several companies today that have seen some bullish activity. Like an Antero, for example, saw some bullish activity today. It was the October 20 calls. And of course, I update a spreadsheet throughout the course of the day on this activity for our members to be able to view, but you'll see a push out there at 20. Is that opening up potentially for October, $20 here? It seems pretty reasonable given our current climate. If you look at, for example, another one, EOG. For EOG, this was the I forgot to write it down. Dang it. So EOG breaking out today. I swear I had it. Oh, here we go. Yeah. The 21 Jan 22. So we're kind of opening up that January expiration, and it's opening up the strike prices out here at $80. So when you think of EOG, it's been down a bit more than Antero, although it looks like we're kind of breaking out of a flag type formation today. We did fade from the high, but we're starting to open up $80, which is saying, look, we might have a chance of retesting our prior highs around 85. Another one, MRO. Now, this wasn't as concentrated. It was a little more spread out through the course of the day with MRO. But again, a nice bullish day, very high volume, closing near the high of the session. 14 has been a very significant level for MRO in the past. Looks like we may have a shot of maybe retesting that level in the coming weeks to months as we enter a winter where, bottom line, forecasts are expected to be a bit colder than normal. So if we have a colder than normal winter, you would expect to see increased demand for oil, like heating oil, for example, some distillate products, as well as natural gas. And right now, we're just not producing at the same level. Again, higher demand, lower supply generally means higher prices. So MRO's in the mix as well. And it's not just all centered on oil and natural gas. This is one, if you look at URNM, this is an ETF that's gone virtually parabolic over the course of the last couple weeks. When you start to look at fund flows and the number, shares increasing, outstanding increasing, there's been a lot of money flow recently. And some indication that maybe those communities out there, Wall Street Bets, whatever, they're out there stepping into uranium and driving uranium stocks higher. Now, of course, the poster child of unusual option activity has been CCJ. This is Cameco Corp. This is the one, along with UUUU, are the ones that generally are traded. CCJ being the most active, being, I believe, the largest uranium producer. This is stock I've been watching for a long time. Oops, wrong one. I've been watching for a long time, going back to early 2020. Thought process being that we're going to have to see more uranium produced and higher demand for uranium because of why? The potential for nuclear. Question mark of whether or not CCJ is going to be included into the ESG kind of craze or craziness. But the point being is that recently it's been really taken off. A lot of activity here. In fact, we posted activity we saw back here in the end of August on our site, looking up, right? And we're hitting those levels here around 25. Maybe have a chance of extending to 30. Now, today's activity was largely what? Closing, rolling, that kind of stuff. Oops. And as a function, we may be reaching kind of that kind of apex, at least in the near term here in CCJ. Watch for the corrections, watch the volume. We may set up for another rally. This is probably setting up or more as an overbought territory relative to other energy names. Just to throw out a couple of other unusual option activity trades out there today. Smile Direct Club. And this is one that we saw a lot of activity back here on the 30th. It picked back up today. This is a stock that has higher short interest. Again, if these communities out there have been really putting on the squeeze, so to speak, are they really starting to fuel another squeeze in Smile Direct Club? We did finish more bullish, although you'll notice we faltered at the prior high here. This thing starts to take out 620, 625. We may have a chance for a real squeeze here, maybe not unlike what we saw, for example, in June, or possibly going back to January. Other attempts to create a short squeeze within Smile Direct Club. Of course, today the active trade was with September. You notice the open interest out here, 650, 550, just a lot of volume coming in here. So expect to see continued volatility throughout the week, as this is really kind of setting the tone. Again, maybe it's a one and doneer, but again, this is one where you have a lot of potential upside with relatively limited risk. And on top of that, as you start to look at the implied volatility of these options, what you'll notice is very, very ramping up volatility out here. This is very conducive for doing debit spreads where you're buying the lower vol, selling the higher vol. And boy, if you start to get a very significant short squeeze, you're putting up maybe 10, 15, 20 cents for maybe $3, $4, $5 of upside if we get to $8. So it's not a terrible setup in the case there is a big move higher here. And that's a great low risk way to consider trading it. Another stock here is here. This is Turtle Beach Co. This is one that, again, another historically higher short interest company. It's one that I've been following since last March. It was on my COVID watch list here. We never, kind of met the full measure of the potential move here. But again, we're starting to see today some movement, some higher volume, potential close above the prior highs right here. And again, what's the near-term upside? This is something you can look at unusual option activity to help set the stage here. This is actually a January expiration, and it's a long call vertical, buying the 32 and selling the 42. That's a 10-point spread, costing at least right now about $2.50. So you risk $2.50 with the upside to make $4 on that particular trade. Not saying necessarily that's the one that you necessarily want to do, but again, that's the one that was done today. And you'll see the volatility is not as conducive for trading a long call vertical spread on here as it was, for example, on Smile Direct Club. And finally, we're going to look at IVC. So IVC is a healthcare company. And this one that's I hate to kind of bring it up, but you know what? We had a very significant gap on the 9th. The company kind of downgraded its guidance, particularly going in not next quarter, but the following quarter, cited some costs. But they did feel that production might start to be able to ramp up. Very little news behind it today as far as its movement. But as far as option activity in IVC, it was rather significant for the 15 October expiration. As you see, just a lot of call option buying at the $7.50 and also the $10 strike price starting to spill out to the $15 for Oct 15. And again, this is one that had its price target cut from up here down to like $8, $9. So again, this is one that's not amazing in terms of the fundamentals or even the news that's out there, but there's a lot of interest stepping in today. If we start to take out this $7 area, we might have a chance of going back to $9 or $10, which is in essence what the activity was pointing to today with so much activity at the $10 strike. Well, folks, that's all we got for today's session. Again, it's our Theo Night video. We'll see you back next week. Of course, we got our daily videos coming out every day.